Hello and welcome to Ask You for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. Stocks rose on Monday despite investor worry about escalating tariff conflict. At the end of the trading session, all major indices ending the day up. And Apple may be looking to shake up its AI strategy in order to help it shake off its slumping stock price. We're taking a deep dive into what it may take to invigorate the tech giant. And investors will soon be binging on Netflix earnings. We're previewing what Wall Street wants to see from the streamer and what the company's quarterly earnings could mean if you were invested. Well, the NASDAQ notching a fresh record close as investors shake off tariff threats and eye key inflation data. For more on the trading day takeaways, let's get to Yahoo Finance's Jared Blickery. Jared.
Thank you, Josh. My first takeaway is what tariffs? There was some pretty heady news in those headlines over the weekend, but I'll tell you what, we didn't really see that in a market's perspective today. Here is the Dow. I'll show you the morning chart. Since the beginning of the day, we did open down, but just very slightly. And 2 or 3 months ago, as we were discussing earlier in the show, we would have been down 2 or 3%, but not today. We closed the day up 88 points. NASDAQ also up 0.25%. S&P 500 a little bit less than that. And the Russell 2000 stole the show up 0.2%. And it's really some of those small caps that have been outperforming, but I'll get to that in a few minutes here. Just want to show you, kind of recap the day's action. The VIX Volatility Index, I'm going to show you a year-to-date chart. This is hovering near the lows of the year. So even with the VIX, the Volatility Index, the so-called fear gauge, which Steve Sosnick says, don't call it a fear gauge, that is not registering much fear right now. So take that for what you will. ICE B of A Move Index, that is the fear index for the bond market. I say that with confidence. It is just up slightly off of those lows, which happen to be the lows of the year as well. And then in sector land, we saw a bunch of movement here, nothing too big. Communication services, Meta, Alphabet leading there. Financials, we get those big bank earnings tomorrow. That was also in the lead. To the downside, energy took a little bit of a downside tack today. That was down 1.1%.
Always helpful to take a deep breath at moments like this. Think, you know what are the risks I should be thinking about as an investor? What would you say, Jared? How would you detail them?
It's that wall of worry, and that's what investors are facing right now. We have the S&P 500 near record highs along with the NASDAQ. The NASDAQ hit an intraday record high earlier today. And I was talking about the wall of worry with Allie Cox over at Ritholtz Wealth Management. There's a new brand new episode of Stocks in Translation that's going to be dropping tomorrow. So that's Tuesday, July 15th. Look for that. But I just want to show you some of the stock action that we're seeing here and kind of discuss a little bit, we're going to touch a little bit on how investors are thinking about these moves. Here's the year to date in the S&P 500, 62.68. We have, I believe RBC was raising their price target today. We're going to see a lot of that kind of motion in the analyst community. But as Tom Hayes was pointing out earlier in the show, they follow. They don't lead, they follow. So look at this nice uptrend that we have here. How do you get in? What are you going to do here? You have fear of missing out, but you also have fear of jumping in. And so these are the dynamics at play. What I will tell you is you have a much better shot at buying the all-time highs than you do at just taking stabs at wherever the market might land here. And that's more so with individual stocks, but also with the indices that were here. So again, look out for that episode tomorrow. Allie Cox is on Stocks in Translation.
Should we do a quick check of crypto?
Yeah, we got to do that as well. And let's skip to crypto year, because this is crypto week, right? But I'm saying crypto, this is the year of crypto. And we have seen Bitcoin soar to 123,000 today, and it's backed off of those highs a little bit. But I just want to review some of the price action because we've had an incredible year here, and this is going to be a one-year trailing chart. Here are the old highs, the old record highs from December, and we got that off of the election of Trump. That was just somewhere down in there. We saw that huge bump up. We got to record highs, then we fell off a bit. Then we just kind of played around in here, had a couple of false breakouts to the upside and to the downside. Finally able to break free. And what I said 3 weeks ago, the last time I was here and we were covering Bitcoin, was in this chart right here, it looked like we were going to break higher, but I was not seeing participation from the altcoins. And you can throw Ethereum in there as well, but you take the top 20 coins by market cap, you want to see that breadth. And let me just show you. I'm going to sort by performance here. I'm going to put the last 10 days price action. And you can see there's a lot of green here. The top one, XLM, up 85%, Algo up 60%, Cardano up 26%, Ripple up 30%. So we are finally seeing that breadth, which is what I want to see in a rally. You want to see that in stocks. You also want to see it in crypto.
It's been a few weeks, as you noted, since we had you on the show. Any big Jared Blickery takeaways over that time?
I forgot how much fun this job is. I mean, we get to talk about charts on live TV with my friends here, so.
What more can you want?
I don't really want much more, Josh. We're going to leave it there.
It's great to have you back, my friend. Thank you. Stick around. Much more Ask for a Trend still to come. The pressure is building up for Apple to invigorate its AI strategy. The iPhone maker facing calls for a shakeup to its artificial intelligence efforts and potentially acquire an established AI startup. Here to take a bite into the future of the tech giant, let's welcome in now Epistrophy Capital Research Chief Market Strategist and host of the Drill Down podcast. That would be the one and only Cory Johnson. Cory, my friend, it is always great to see you. Let's start here, Cory.
Did you really go with take a bite from the apple, really?
If you put it in the prompt, Cory, if you put it in the prompter, I will read it. That's how it works.
Oh, I know how that works. I know Ron Burgundy, let her rip.
You know it very well. Let me ask you this. So we have had a number of Apple analysts are out there. And I've heard from some well-respected guys, Cory, they've come on this show, this very show.
Yeah.
And they're making this case. They say, Josh, Apple has got to do a big deal, a big AI deal. And they'll even acknowledge, Cory, let's say, these guys have covered Apple for a while. They'll say, listen, I get it. It is not Apple's DNA. It's not what they do. They don't do big M&A. They do actually a fair amount of M&A. You just often never hear about it. But they don't do big M&A. I mean, the biggest was ever $3 billion for Beats, but they say it is time for Apple to write a big check. That's what they need, and I am curious to hear your take on that.
Yeah, I mean, you and I have both been at this for a minute covering Apple. It is true that Apple never does these giant deals. It is also true that the analysts constantly are begging Apple to do giant deals. Some of those analysts working in investment banking firms that would like to suggest everyone should do lots of big deals because they take cuts of them. Apple doesn't do big deals. Now, maybe that'll change. Things have changed over the history of Apple. But I think it's just not the way this company does business. But the constant calls them to do these things, they happen to follow a cycle, and it usually is right before some major innovation or big uptake in Apple product consumption.
I'll give you a name here. I had Dan Ives from Wedbush just on the show, and he said not only do they need to do a deal, he gave me the name. He said they need to buy Perplexity. That's what they need to buy. I think his exact words were, that would be a no-brainer, I believe is how he put it. Would that be a no-brainer, Cory?
I think, Perplexity is losing vast fortunes. We don't know the numbers because it's a private company as they try to build out their AI models. They also have a lot of people in-house. One of the things about acquiring an AI company right now, we certainly see it from the headlines from, in particular, Mark Zuckerberg taking over hiring at Meta, is that the assets walk out the door every day. You might have a great large language model all cooked up, but the ability to evolve upon that is really those hard to come by AI engineers. And those engineers getting offers, which are kind of hard to believe, but 100 million, 200 million, Juan Soto kind of numbers. Those may be true, those may be related to weird compensation involving stock options and over time. But I think that the notion that you would go out and buy a company and own the assets isn't what really happens here. What happens is the assets are sitting in a chair and can take the elevator out and be gone the next day. So it's a trickier thing in this era as this industry evolves. And I think that that's the point, right, is that Apple has never been first to the game. You could argue maybe back in the 70s when they invented some of the first personal computers, then they were first to the game. But Apple has typically not been first to the game in the products that they release. They wait for the pioneers to take the arrows, and then they create just a better product. And we've seen that time and again from Apple.
How would you generally characterize, Cory, Apple's AI approach, Apple's AI strategy, and how you see it differing than a lot of the other tech giants we talk so much about?
Well, I think it's really important that it follows a lot of the things that they do from a product basis, whether it's software or hardware, that they are very focused on user privacy, and they're very focused with the things happening on the device, which is how they make their money, is selling devices. Yes, services are an increasing component of their revenue. But I think that going forward, what we're going to see from Apple is they're going to start to incorporate pieces of AI into these devices. They're not willing to have the problems that OpenAI, that ChatGPT is given with hallucinations or Claude or Gemini. They want to have a higher quality product. I think they've been burned by some of the errors we've seen from Siri, and yet the Siri errors are nowhere near as bad as the results that have come out of ChatGPT or Gemini or even Claude over the course of the last couple of years. And I think that what they want to have are some in-app or on-device AI processing that's happening, and the chips are just getting there. And what that's going to mean is a real big turnover in phones that won't be able to do things that most of the phones in the market, the new phones in the market, will be able to do. And it's going to create some real sort of device envy among their users with the new iPhones coming out this fall, and indeed the phones coming out next year and the year after that. They're going to start to look really different. They're actually going to physically look very different. We're going to have a foldable iPhone as well. But the notion that you can do certain things in AI with a newer iPhone that you can't with an old iPhone could really create a new driver of demand for their physical devices.
What is your sense, Cory, of how excited consumers are for these AI features? I know investors are excited, and I know many on the street are excited. What is your sense of how excited our friends and family are? You mentioned those new iPhones. You'd expect Tim Cook to take the stage somewhere, in September. He'll unveil the new iPhones. I mean, is your sense a lot of folks will upgrade or not upgrade based on the AI features, or will it be about the processor and the battery and the camera? What do you think?
I think that the AI use cases aren't there right now. When the first iPhones came out, even before there was location-based services, we couldn't imagine that there would be multi-billion-dollar companies created with things like Instagram or Uber, and those things became possible largely because of the iPhone and other phones as well. And so I think that the ultimate use cases of AI, you watch people try to use AI like it's a search engine. And those are not the true sort of amazing things that AI can do here. But I think that Apple might quite well be the leader in showing us actual functional use cases for the average person to put AI to use. And that's just not there yet.
They're telling me I have to go, Cory, but I need one more Cory Johnson hot take. Tim Cook, you saw how there was some real hot talk about Cook, and analysts had raised this question, Cory, about whether it was time to make a big change in the C-suite there in Cupertino. We should know Bloomberg's Mark Gurman reporting Cook is staying put, he says, but I'm just curious what you made of that.
Well, first of all, I know not to cross Mark Gurman when it comes to covering Apple, but
yes.
I wrote a note a couple weeks ago, the headline of which was Tim Cooked. But I think that, over time, we're starting to see some big changes in the leadership of Apple, whether it's Tim Cook or not. One of his chief deputies announcing his retirement, I think last week, the COO, who's been so responsible for the success of Apple over the course of the last 20 years. Apple has not had the kind of mistakes we've seen from every other technology company ever, which is buildup of inventory when consumer demand or economies change. Apple has kept that from happening because they've had such great control over the manufacturing process. But we're going to start to see some of these real senior leaders are just aging up at Apple, and we'll surely move on to some new leadership. We will see those changes, whether it's Tim Cook leading the way out the door or not.
Cory, always love having you on the show. Thank you,
Good
my
to see
friend.
You, bud.
Stick around. Much more Ask for a Trend. That's still to come. A highly anticipated earnings report coming out on Thursday. That would be Netflix. The company reporting second quarter results after the markets close. For more, we're bringing in now Yahoo Finance senior reporter Allie Canal. What can we expect, Allie?
Wall Street is expecting a modest beat on both the top and bottom lines, boosted in part by that weaker dollar that's helped fuel international revenue. Citi sees results coming in about 1% above guidance, while JP Morgan says Netflix is tracking ahead of its full year forecast thanks to strong content, ad growth, and pricing power. But for investors, this report is just a warm up, right? The real anticipation is what's coming down the pipeline. So Netflix is entering what analysts have called its strongest second half slate ever, with massive shows like Stranger Things, Wednesday, Squid Game, all returning to screens. I'm actually mid-binge Squid Game, by the way. I recommend it, but Stranger Things in particular is being eventized. So episodes are dropping on Thanksgiving, Christmas, New Year's Eve. So really timed to maximize viewing during the holidays, which we have seen Netflix do with previous tentpole content. But it's not just a scripted series. Live content has become more of an important growth driver for this company, from boxing matches to NFL games, even a potential concert series with Spotify. So investors will be looking for more color on that on the call. And then finally, advertising. Netflix is seeing real momentum there. The company now has 94 million monthly active users on its ad-supported plan, and it does expect to double ad revenue this year to roughly $3 billion. A key driver is Netflix's new in-house ad tech platform, which rolled out in the U.S. this spring. But beyond these growth drivers, there are still overarching questions. For example, the company raised prices earlier this year, and while it does no longer report subscriber numbers, analysts will be watching closely for signs of churn or consumers downgrading to cheaper plans. Valuation is also a top question, with shares up more than 40% this year. Netflix trades at about 40 times forward earnings. That's a premium to the broader market, along with some of those tech names too. So while some analysts see upside ahead, others warn that much of the optimism may already be priced in. And to that point, JP Morgan is still on the sidelines heading into this report, saying Netflix is going to have to prove that it can deliver on big expectations. And that's really the double-edged sword here. With the stock trading at a premium, Netflix now has to justify those high multiples to keep investors happy. So a big earnings report on Thursday, Josh.
Sure will be. Thank you so much, Allie. Appreciate it. Well, Superman is swooping in to save the box office. It's been a rough couple of years with cautious consumer spending proving to be the movie industry's kryptonite. But DC releasing the newest edition of its flagship franchise on Friday, breathing life into a beleaguered box office with a $125 million opening weekend. For more, we're bringing in Gitesh Pandya, editor of Box Office Guru. Gitesh, always great to see you, especially on set. Let's start with Superman. Big weekend. What did you make of that box office performance?
Well, it's a great performance. You know, this is a brand that's been battered down over the last few years. They had many flops, some horrible films, so those films deserve to flop. And the audiences basically said, listen, we're done with this. So they have new management. They have a new regime here, Peter Safran and also James Gunn, who directed this movie. So Superman really kind of brought back the old original feel of the comic books. It's lighter. It's not as dark as the last few films were. And this movie is not about one film making money. It's about the next 6, 8, or 10 movies making money. And so they successfully rebooted this brand. People like it. The critics liked it. The audiences came out. One of the major factors, a big test, was on Sunday. And Sunday dropped only 17% versus Saturday. That's an excellent hold. That means the word of mouth is kicking in. You have schools, colleges off in July, so the midweek grosses this week should be very well. The next big superhero film is Fantastic Four. That's about on the third weekend of the film. So it's got 2 good weeks to make a lot of money and sort of get to 300 million, possibly 350 million domestic.
And you saw the movie yourself. Give me the Gitesh review. What'd you make of it?
I liked it. I didn't love it. I think
why the lack of love?
So I think there are some corny parts to it, some cheesy parts to it. It's a little bit cartoonish. Surprise, surprise. But I think the younger audience might like that more than I do. But I'm the anomaly. I think most people like it a lot more than I did. But I do like the cast. I do want to see them in more films. That's a good thing. The one downside is the international side. It did okay overseas, not great. $95 million from the overseas markets. Brazil did well, Mexico did well, China did so-so, UK did well. A lot of the markets didn't do all that great. It was more of a B-list superhero numbers, not A-list superhero numbers. So, you know, I think that the percentage of the global gross coming from international markets is a lot less than most superhero films. I think that's an area they might need to sort of improve upon next time.
You speak about the younger audience. Speaking of younger audience, my 6-year-old, the wife took her to see Lilo and Stitch this weekend, which they loved, right?
Yep.
What impressed my wife, Gitesh, to get your take on this, was the theater, physically the theater.
Right.
In terms of, she said, the seats, like how big they were, the tables next to the seats where people were just ordering in. I mean, forget about like popcorn and milk duds. People are having full meals.
Right.
Talk about that a little bit, the transformation we've seen in theaters.
Well, there's a lot of changes. I love the $9 Kit Kats. But then you also have the popcorn and everything else. The theaters have invested a lot. I mean, obviously AMC gets a lot of attention with the stocks and everything else, but Regal, Cinemark, everyone has invested a lot into the experience. And so the movie industry is now less about just which movie you're seeing, but what experience you're getting. And so people are paying more. What you'll see today is that IMAX and the other premium formats of these movies are getting a higher percentage of the gross, meaning people are willing to pay extra for the extra experience. The visuals, the sound, and everything else. I saw some movies recently in 4DX, in IMAX, and it's a much better experience. A lot of people are willing to pay for that. And I think that as long as you have something on screen that takes advantage of it, whether it's a kid's movie, because people have kids at home watching TV, you take them to a theater where they watch a bigger TV, it's got to be a good experience to do that. And so the bigger brands are working. Lilo and Stitch, your wife's very smart to bring them to that movie. It's doing very well. It's going to hit $1 billion very soon. But also the adult films. Original films are hard to sell, but Brad Pitt's movie F1, about to cross 400 million, going to cross 500 million worldwide. That's a big hit too. So this summer we're doing very well at the box office right now, and the rest of July looks pretty strong too.
You mentioned F1. How broadly, Gitesh, when you see big tech like Apple, for example, getting so involved, how has that impacted and influenced and affected the industry?
Well, one argument is that they're just looking for content that eventually goes to their streaming service. But Apple got into this business early, and they had no library. They have no movies, no TV shows from the past that they can rely on the way Disney can when they made Disney Plus. That and Apple TV Plus came out around the same time. So what Apple has is a big bank account, a big checkbook, and they were just giving out blank checks to every celebrity out there. Go make a film, go make a TV show, we'll fund the whole thing. And so they had a couple of flops, but now they're realizing, okay, well, let's produce it a little bit better. F1 is an example of that. It's a solid film. I gotta say, it's not gonna be the same when you watch it at home on Apple TV Plus as in the theater. I've seen it twice actually in the movie theater, and it's a great experience right there. But they have an idea of spending a lot, and over the next 5 to 10 years, build up a bigger library, some of which might have sequels too.
All right, I need to go see F1. That's my big takeaway. Gitesh, thank you, sir. Always a pleasure.
Great seeing
to see
you all the time.
Well, that is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market boom stories affecting your wallet. Have a great night.